Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Hector McNeil, co-CEO of HanETF. He joins us to discuss why North American asset managers are looking to enter Europe via the white label route. It's great to see you again, Hector. Welcome back to Trade Talks.
You too. Nice to see you again.
All right, you got it. And before we get into the North American asset managers, explain to us, tell us more about HanETF.
Yeah, so Han ETF stands for Hector and Nick. Nick and I, this is our fourth ETF brand we brought to market now, but it's our first white label business. So we're the first white label business in Europe and still the biggest with over 20 clients, $3.5 billion of assets, and footprints in all different asset classes. 40% of our clients actually are US-based asset managers. So it's a big, strong market for us.
So let's talk about that. Why are North American asset managers looking to enter Europe, and why are they using the white label approach?
Yeah, so it's really quite simple. I think if you've got the 40 Act wrapper and UCITS, UCITS being the equivalent of 40 Act in Europe, you pretty much got global distribution, because UCITS not just covers Europe, but also it's very popular in Latin America and is in Asia. And I think what happens is when people look at entering the ETF market, if they have to put the full smorgasbord of services together, it's a multi-million-dollar, 2 to 3 year exercise. But with a white label provider like Han, you can have a product in the market in 10 to 12 weeks. So if you've got a strong brand in the US and you're getting strong take-up of your IP, you could be in the market very quickly using the Han platform. And we cover everything from getting the fund out, and we have a full distribution capability as well. So it really is soup to nuts what people need in the ETF space.
Tell us about the relationship with Sprott Asset Management.
Yeah, so we've been working with Sprott for a couple of years now, and they're actually an ideal client for Han because they've got such strong IP and content in the US, and had big success in the US and Canada. So, where we work strongest is if the client really comes to us with a strong brand and strong IP, and we basically just try to replicate that in Europe. They were getting strong demand out of Europe and the rest of the world, and people asking for the UCITS equivalents of, particularly their uranium areas, but more broadly in the commodity space, and they came to us with this initial idea, and then we've expanded it now to 4 products, So I think, and they haven't got any boots on the ground at all in Europe. All they do is come over and visit for, sales conferences, road shows, various events, etc. So it really is a light plug and play for them to be able to bring their brand and their IP to European and global investors.
How have these ETFs been received in Europe?
Yeah, very good. So we've got 4 with them, and actually, the major success, obviously, what people know them about is uranium, and we have a fantastic uranium miners product, URNJ, which has recently launched alongside their other uranium product. There's nearly $300 million of assets in that in just over a year. So the European investors, since the crisis with the war in Ukraine, etc., have looked at the nuclear power as a sort of different spectrum now. Before there was probably a lot more resistance to it, but I think people now realize that the wind doesn't blow every day and the sun doesn't shine every day. So from that basis, they need a stable power source, and wean themselves off, Russian sources. Uranium's become a big strong point with that. So URNJ has been a really, really strong success point from there. And then, other products like their copper products, CPPR, that we've recently launched, seems to be, where uranium was a couple of years ago, and copper demand, has recently seen a massive rise. It's expected to go, 1.6 times or 2 times over the next couple of years. So it's a massive function of the energy transition story. So copper demand's been huge. So CPPR has been very, very popular from that perspective. And then the third product we have with them, and also Nasdaq indices, is SETM, which has a sister product in the US. And again, that's a broader play on the energy transition story. So everything from lithium, nickel, manganese, cobalt, and graphite, and including uranium and copper as well, has been really, really successful. So we see those sort of 3 products out the 4 have been really, really strong in Europe, and certainly the demand for this isn't going away and is only rising from that perspective.
All right, Hector, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Many thanks.